But let's also welcome on board and talk about Shriram Transport. They've raised about $250 million via the ECB route. What's it going to be utilized for? Umesh Revankar, VC and MD at Shriram Transport Finance, joins in on the show right now. Mr. Revankar, you've raised $250 million long-term funding from US government's DFC. Help us understand the key rationale behind it. How is it that you're going to apply these funds and what it really means for Shriram?
See, we have been raising resources from the international market for nearly 5 years now. Initially, we started with the Masala bond, then through ECB route. Then the later part of ECB route was the social bond. The social bond is within this ESG framework of lending. ESG means environment, social, and governance. So under social and governance, if you are generating a sustainable income to the family or the person who is raising a loan, that helps him to build his business and raise his family, maintain his family. So that is that's called the sustainable income. And under that, we have been raising resources for last 3 years, and the DFC also saw this as a good way to invest in developing market, and therefore they have sanctioned $250 million. And normally it comes as a longer tenor. So not only the US DFC, we also have raised it in a couple of Europe market in the past. So this will give us a long tenor loan, and also it will give us a lower yield, so that we can pass on the benefit to our customers.
Good morning. This is Nayantara also joining in on the conversation. Now, while most industry and CV financiers like yours have suggested green shoots, tell us how strong the recovery actually is.
See, the CV has come through a difficult time in the last 4 years, and from last year we are witnessing the upcycle. From 2018-19 financial year, the CV from 1 million sale in a year, it came down to around 500,000, and from 500,000 it is moving up, and last financial year it was 700,000. And I believe next 3 to 4 years, CV demand will go up, and CV cycle will be in the upswing, mainly because the infra spent by the government is going to create a lot of demand for the CV. So what happens is when the infrastructure spend, government does infrastructure spend, you do need a lot of cement, steel, and the large commodities moving across the geography will need more wheels. That's one. And also, I believe the economy in general is an upswing. There is a good demand for real estate. There is a good demand for various other consumer product, even though there will be a little lull in between because of the inflation in the last couple of months. But going forward, I feel there is going to be a bigger consumption drive, and that will create a bigger demand for the vehicle movement and last mile delivery.
Now, the target, the guidance which has been given is a 12% growth for assets under management. How conservative is this, and what are the growth levers? For example, is it going to be the used CV space, the upcycle that you were just talking to us about in the previous answer?
First of all, the used CV space, the demand will be continuous, because if you look at last 3 years, the agri has been very strong in the overall demand because of the good monsoon. The good monsoon for last 3 years, and also this year, the forecast being normal monsoon, I feel the rural demand has been very strong. Therefore, the used vehicle demand, which is mostly in the rural market and semi-urban market, has been quite strong. And also the new vehicle prices have gone up significantly because of movement into BS6 and also steel price going up. Both have created a bigger price going up and bigger demand for used vehicle because people prefer to buy used vehicle interim when the new vehicle prices going up. So I feel because of that, the rural, because of the rural demand and also the price increase in the new vehicle, the used vehicle demand has been quite strong, and it is likely to continue to remain strong. We have kept a 12% growth mainly because we there are various parts in the geography which has not fully recovered post-COVID. Some have recovered fully, some have not. So we have been little cautious on that. So we have kept 12% as the growth for this year. But next year onwards, we should be growing much higher rate.
Mr. Revankar, good morning. Now, while the merger of STFC and SCUF is underway, help us understand what some of the key synergies are, because we understand that 77% of the AUM of the merged entity is from Shriram Transport.
Yeah, STFC has a larger ticket and longer tenure book. So STFC book will continue to remain at around 70% for quite a long time. But we do expect the Shriram City Union products, especially two-wheeler, gold loan, SME, to grow faster because their reach has been mostly in the south and west market. The rest of the India, their network have been a little lesser, so they are not big reach. So we are creating that reach, and through STFC branch, the SCUF products will get a bigger reach. That's one. And also because SCUF customers are likely to upgrade themselves to buy a larger ticket loan or vehicles, they will definitely, STFC products would be appreciated by the SCUF customers. So mutually, we feel that as a combined entity, there will be a much bigger growth than the standalone growth of 12% for the STFC. So we expect a combined entity to grow at around 15% CAGR for the next 3 years.
Finally, your asset quality has improved, but the write-offs have been fairly high in Q4. What's the reason for that? And can you walk us through your trends on asset quality? What is it that you're foreseeing?
See, asset quality, the collection have been good for last, maybe, I should say from October. It's been 100 or 100, above 100. That really helped us to bring down the gross NPA levels and improve the collection. So there has been substantial improvement, and I believe it will continue to be good even in this financial year. The write-offs were mainly because we had made that COVID provisioning. We had a total provisioning of 2,800 crores related to COVID. And now since COVID impact is known, we have started looking at write-offs or write-back depending upon the portfolio behavior. So there has been some kind of using of those provisions in the last quarter. And this quarter again, we have this full financial year, we have another 2,000 crores of provisioning still to be used, which we would like to see on case-to-case basis and take a call or write off or write back.
Thanks, Mr. Revankar, for joining in and sharing with us the outlook on the business as well as the merger synergies.